I'm sure you will figure out who's who, right? So I don't need the people are figuring out, are they sitting in the right sequence? Maybe we also learning through the journey, right? So I think we should have put it up front so that there's no confusion. I think the session was amazing. We heard from regulators speaking about collaboration and all the initiatives which they are taking and talking in front, right? I think a few years back, regulator coming so openly and talking about it was not very visible, right? So I think this is one big change which we have seen. The second big change we have seen is that the networks were very, I would say, opaque. And we have seen networks very vocal, very visible. The innovation has happened because NPCI has also worked very closely with the market. Earlier it was not so. We know that it was always linked to some activities happening. We don't know, right? Nobody could know. Now everybody else is also innovating. So networks are also innovating because NPCI took the edge. And of course, in terms of areas where we believe that, let's say, in credit card, right? We thought that collaboration was not possible. But what I think, Anurag, you have built is unique, right? Nobody knows this model and nobody believed that a credit card stack can be built in India. We always thought it can only be done outside. So I think the market has changed a lot. I'm so happy to see, and we live in a world where, and I'm old, right? So I know that world was very different. Some of young guys will think, yaar, aisa nahi hota tha. But हम उस ज़माने के हैं कि check truncation नहीं होता था, right? So check used to move, and we used to in Citibank. I used to manage the check management, and I would say, oh, cash management, and we used to say 31 days will become 10 days, 5 days with Citibank working with all the banks, right? I think maybe I'll start with some questions, and I'll seek guidance from the leadership here. And I think we have a very interesting panel, all from different backgrounds. Maybe I'll start first with Praveena, you. Now, in terms of the way NPCI has sort of built a lot of that, just first thing first, how do you build a sort of deep collaboration between various entities, which is win-win for all, right? Everybody has a different sentiment. Startup will have a different sentiment. Unko zyada paisa banana hoga, investor push. You have your own thing because your platform should run. Regulator has its own objective, and banks obviously want to make more money out of it, right? So how do you build a win-win situation for all, which will help every, and finally you have to figure out it works for the customer, right? Customers finally have to get the right stuff. Sab kuch ho gaya, but customer ko kuch nahi mila, right? So any thoughts on your side?
No, I think the day started off on the best note for this topic, right? So you had the head of RBI Fintech here talking about the collaborative model with which the regulator is approaching the market, and there's no better start than that. So right from the regulatory sandboxes that permit the market to explore the boundaries of regulatory policy. So while they are technology sandboxes, actually they are moving the scope of policy, and ultimately will go and advise and provide the direction for policy. So between the setting up of the fintech department, the RBI Innovation Hub, the various sandboxes that RBI runs, I think is a great starting point. From an NPCI standpoint, what we tend to do intensely and intentionally is take a highly consultative approach. So everything now starts with really, I will say on one side, you can look at it as crowdsourcing inputs. But on the other hand, really engaging deeply with various sections of the market, right? The entire industry, because probably at one point it was only the banks. Then, it said we need to also talk to, app providers. Then it went to, aggregators and, acquiring side of the ecosystem. Then, business correspondents. And now we said, look, if you don't talk to the technology service providers, then, they are the foundation on which everybody else is building. So this ecosystem is so deep and so rich that deep engagement is like mining for gold, and then that then advises and informs everything else. And really using more of open APIs, unbundling the products, then creates the framework around it. And of course, we have the process of working groups and, inputs that operate as oriented from that point of view. But I think the more we move towards open APIs, API frameworks, more transparency and visibility, more data. In fact, even on our website, we are putting more and more data, whatever we can, that is anonymized data available. So the industry can also figure out the opportunity spaces, open spaces, problem statements that have not been addressed yet, and then innovate on the back of that. And it's very important as an infrastructure to also kind of draw that line where we solve the core problem so that the road becomes better and better, and leave the last mile innovation to the vehicles, right? So there is the real building of the core infra that then allows all the innovation to really flower on top of that.
Fantastic, fantastic. I think Rajeev, I remember in 2000, maybe 15, 16, RBL was taking those steps to partner with fintechs when it was not really that, it may be attractive, but nobody was doing it, right? And you have seen the journey of building it up, rebuilding it, and all of that. So I think maybe you can share your story of how you understood the partnership worked and what it takes to build a great partnership with fintechs, given that you are the one who has gone through the whole cycle.
More than one cycle, I'd say. But I think, let me first confess that when we were building out RBL in the first 3-4 years, our operating model was pretty much what we had done reasonably well in our earlier jobs. I mean, I don't think any of us had religion of a different kind. But somewhere when the overall consumption environment on financial services, some of the innovations around wallets, acquiring, started what I would say the process of separation of the full stack. I mean, you know, earlier a bank used to do end-to-end and then outsource it to the technology service provider. Here, the thing started inverting. And that's when we got a little whiff that, hey, you know, this has been a supply-starved world, financial services. And now slowly it's becoming demand-led. And today it's substantially demand-led. In this space, for us to go and reinvent the wheel, pretty much what other larger institutions had done over 20, 30 years. And it's not about technology. So let me just be very clear, it's not about technology, it's about your business model, what you want to do for the customer. And then we saw the advent of public platforms, you know, IMPS, UPI, and now many of them. I think we started figuring out that actually it made sense to focus on a few core things which you can deliver, which for a bank meant payment services, infrastructure, you know, recon. And then, as Praveena put it, the innovation was happening at the edge. And so we started just learning and listening to young companies. And I can tell you, if that has been worth millions and millions of dollars of spending by ourselves. I mean, what we picked up listening to them and working with them, you know, we wouldn't have been able to figure ourselves out if we had gone on our own. And the approach we adopted was, look, don't be the big bank, you know, that I know everything. And frankly, we were too small to even profess that. Listen, learn, work together, build a certain approach which can help the partner also prosper. Because the biggest thing for us is the partner does not prosper, then this will never work out for us. I think, let me put it this way, obviously there has been a sea change in the scale and the economics of the business. Today we are staring at a much larger market. In fact, I think this distinction between a fintech and a non-fintech in the customer's mind does not exist, you know, which is, I think, a very important thing. And I think for us, you know, that has been so today I would proudly say that 30-40% of our businesses are driven off partnerships. Okay, and I think increasingly for a bank, it is not always feasible to build your own branches, build your own apps, build your own points of presence, because you may not know the entire consumer space or the business space as well. And frankly, with so much work happening on data democratization, you know, account aggregator, we've taken open banking and really made it open. And the role of financial services providers, they can choose what to do and what not to do themselves. So in some businesses, we, as they say, go full stack. In some businesses, we go partners. And I think that will continue evolving. Now, somewhere in the middle, and I heard the GM from RBI talk about it, somewhere in the middle, we also sense that this is becoming a very important part of the environment. And therefore, the focus on data privacy, the focus on InfoSec, focus on fair practices, services, redressal will become very important. So we actually slowed down. Between 18 and 20, we slowed down and actually caught up with our breath. And I think that is important for us because if this has to survive and become a very large opportunity, and I think partnerships are here to stay, collaborations are here to stay. And that's a fundamental aspect of the industry structure. I don't think you can take it away. So we have to respect that when this is mainstream, our practices have to be mainstream. So those have been our learnings. I'm not saying we are a 9 on 10. We think we are an 8 on 10, then we fall to a 5 on 10, then try to climb back to a 7 on 10. I think that's the way things will work.
No, that's humility, right? You're talking about your own ups and downs, right? Thank you. Thank you. I think maybe in the next round, I would ask about how banks internally can change because a lot of roles and responsibilities will have to shift. So I'll come back to on that. I think from your perspective, normally when you think of fintechs, and I believe in 2015-16, you would believe that a 23-year-old guy or 25-year-old guy will do it. And we see vintage guys doing it. And I'm not saying you're that old, okay? You're much younger than me. So I think with your experience, you have been on all sides as a banker now and multiple times founder as well. I think I want to know what is the sort of your vision of collaboration across these startups, banks and fintechs, and regulators. What is the right reality, right? Because market, if you see something goes up and down regularly, right? And it's very, very significant. So what is the optimal way of creating this collaboration so that we can't have a business model going down because it's going off the track from somewhere? How do we build a stable world? Because customers also are significantly impacted. I know my daughter is not getting access to a particular app for maybe last 6 months because the app is down. Regulator may say that it's because they believe somebody was wrong, but there are guys who are actually 99% people who are very happy with it. So what about that? So any thoughts on how this stability can stabilize the world?
Yeah. It's so interesting that you asked me this question just after Anuj's session because he actually spoke about that. But before I answer that straight, let me give you a context to it. So one is, I think all of us are driven by the size of the market opportunity. That's very important to remember that. And when we compare fintechs in India versus fintechs outside India, is that in India it's not a zero-sum game. We're still talking about very large part of the banking and not only banking, but insurance and other parts of the financial services being penetrated. And the second thing is the mobile revolution, that everybody has a mobile and we can reach out to large set of customers in a very, seamless manner. So that's the context. And what we have done in last, I would say, 5-6 years, and especially in last 3 years, we have seen a lot of this is becoming demand-led rather than supply-led, like Rajeev said. Because before that, a lot of digital businesses in India were more incentive-driven and push-driven. Especially post-COVID, we have seen consumer opting for digital services across, different categories. But I just want to say 3 things. One, thanks to entities like NPCI, India adopted an open architecture. And open architecture is very important. There are many countries we have actually built probably bigger fintech ecosystems for the time being. We'll of course cross them. But it's concentrated across 2 or 3 entities. And the problem is that the innovation gets driven only in those pockets. And this is very important for a large ecosystem to emerge. The second thing is, from an interesting projects for most of the banks, a lot of fintechs have become viable business. And of course, there is a path to it. And why it is important? Because then both the entities see value in investing it. Because essentially, if you want a partnership to grow, both the parties have to invest behind it. You need to create compliance systems, you need to create security systems to make the system work. And UPI is a classic case. Banks, networks, and fintechs working together. And in a democratic setup, it's, we learn very fast by looking at successes. So UPI is teaching, all of us how to build this ecosystem at large. That's the second part of it. And third is, I think, which is the regulatory part of it. And I wanted to answer those 2 contexts before I answer the question is because in short term, you might see some of these actions affecting. But frankly, as a founder, and I'll also speak on behalf of investors, what both of us want a clarity of rules for long term. I mean, short-term hiccups will happen. And by the way, even banks get affected by a lot of regulatory action. It is part of the game. So what we are trying to say that, once we have more clarity, and Anuj spoke about just before us that their intent is to actually develop the ecosystem in a responsible way. And there is a lot of meaning to these words. So I think my simple advice is that we don't navigate regulations, we just follow. Okay, whatever we know, and then whatever we get to know, we just adjust to it. The good news is that investor community is also understanding this very well. So they are giving a lot of leeway to founders to build around that. Ultimately, it has to be a sustainable business model. Otherwise, this partnership will just not scale. And UPI has created the use case for all of us. That, okay, this is how the scale companies can be created. So, we are quite bullish about it, frankly. Yes, these circulars have come, but they have come in a context because they actually want to grow the sector. I'll just give a small context before I end this. Look at payments. DPS has got created in 2005. The Act came in 2007, and after that, in the next 15 years, payment industry has grown so large, banks and non-banks put together. So some of these things have to be looked in that context, not only for 2 or 3 or 1 year events. You have to look at 5 to 6 year scenario.
Fair, fair. I think it is a context, right? Who gets hit, he realizes that he can't wake up ever, right? So you say only one person died, right? It's okay. But that person actually died, right? So there are challenges, given that we are on the ground. Sometimes it feels very sad about these journeys, right? But anyway, I think fair point. Now coming to Praveena, from your perspective, I think we heard enough about UPI, enough about what innovations happened, right? So I think we want to really know about, and it's great, so I'm not against it. I'm very, very happy with what has happened. We have been part of the journey of build-up. What next is coming across, right? What is the new stuff coming from NPCI? How we can leverage that right away? How can we get ready?
Yeah, so I think there are a number of things, but let me kind of focus on a couple of them here. What's really most exciting in market today is the linkage of RuPay credit card to UPI.
Correct.
We spoke of unbundling, in the first question. So UPI architecture, unbundles what you can link to your UPI ID. So till now, you could link a savings account, a current account. RBI has now permitted a prepaid account, and many prepaid players have starting to go live. An overdraft account, though the use cases for that have not become very popular. Slowly, some use cases we are seeing in market. But for the first time, credit in a big way is going to come on UPI. So linkage of RuPay credit card to UPI is going to open up a massive space of opportunity, because we really think it will demolish the cost associated with onboarding on acquiring a new credit card customer. It will lead to deep penetration of credit cards in the market. India is amongst the least penetrated around the world of credit cards. We are in single digits of penetration. Even other developing markets are in mid-level of double digits at least. So deeper penetration, more use cases for people who are already credit card users, that they don't have to carry any card, they just have their phone and all their transactions are done on UPI by linking to credit. So they get rewards and all that goodies and nice stuff we like from credit cards, while still enjoying the whole UPI experience. So really, this is what we are most excited about. The first time credit is coming in a very big way on UPI rails. And it's not just about the experience of making a payment, but how can you bring the entire credit life cycle journey in the way that UPI usually operates. Now, what can you do? Can I check my unused credit? Can I check what I have to pay? Can I quickly pay my credit card bill? Can I change some parameter? Can I take up an EMI on the fly? So it's going to open up so much that I think I'm very excited about that. The second thing will be Aadhaar onboarding on UPI. So using Aadhaar to onboard on UPI. So till now, largely it's been using debit cards to onboard on UPI. And I think Aadhaar now will go to a space where probably even we don't have that much of debit card usage, and will really bring in the next large swath of people into UPI. So these are the two most exciting things, according to me.
Fantastic. I think there's a lot of buzz around that UPI on credit card because it comes, then the need for card is over, right? Physical card should go over. It was very irritating to pick up a card only for credit card. Otherwise, people are using UPI for everything, right? So yeah.
Even 60% of the repayments on credit cards are happening through UPI. So customers are already using UPI for their entire life. So this is a very, very exciting product for us as well.
No, brilliant. I think, and the other thing is that if you have a decent stack and on RuPay, on UPI you build, you will have a new world of innovation coming rather than, which is right now your card is all focused on the top end. Maybe I'll change the subject itself. It was not planned, so you picked it up, so I will change the question to you. So how do you intend to use this new innovation for building it up? It was not scripted, okay? I'm just changing it.
So we are super excited about it because as a tech company, our vision is to solve for consumption credit, and UPI is not a product anymore, it's an infrastructure layer for India. Millions of people are using it. As I said, 60% of the credit card repayments happen through UPI. And secondly, UPI merchant acceptance is even, there's no comparison. It's just a very, very large infrastructure compared to the card payments infrastructure. And last thing is it's mobile driven, and which is what Indians have learned how to use mobile for managing money. So we are actually working with them. In a couple of months, we should be live. So we're very excited about it. And I think this will also bring net new customers and net new transactions, if I may add. This UPI credit will actually get net new customers and net new transactions across. Not only in, even by the way, in top 10 cities also this will make a major difference, because it's not that UPI will only get more people. Even within city like Mumbai, look at the usage of UPI all across. So we will be able to use a credit product right up there, and we can process the entire transaction built in India, processed in India. So we are very excited about it.
No, I think, and in fact, the matter is I used more of my UPI because I know how to use it. Card pins are typically forgotten, and that is a fact that I don't have a pin of my credit card with Pina. I only do it online, right?
In fact, I just want to add, even Praveena, we have UPI Lite is also a very large product. Of course, you have plenty of products to speak about. Ultimately, you have to choose. But I sincerely believe UPI Lite will create much faster transaction. That's one of the problems to solve, where our transaction approval rate will go dramatically up. And this is also can accelerate the adoption.
Fair. I think again I'm taking off the question itself and asking a different question to you, which is all said and done, it's a tough one to transform the organization, right, from a people perspective. I think it'll be good for, and now the fact is that everybody is transforming. There's no choice anybody has. Large guy said, "मैं नहीं करूँगा, मैं compete करूँगा, मैं छोड़ूंगा नहीं." All that is gone, right? So how do you build a culture, and how did you build a culture, and what is your thought process to others that how they should go about building it?
See, I think first of all, also we should acknowledge that what has been built is not bad. So, we should not start from the point that what is there. It's worked for years and decades. But like everything which changes in the environment, some changes are faster and some changes are induced from public policy, which we've seen in the last 6-7 years. So I think the first thing is awareness, conversations, and my favorite word is osmosis. So why did we go and meet the startups and the VCs? Because we didn't know a damn. So we said, just listen. We got to know what API banking was because we just put a new core banking and middleware. And we said, ye le lo, payments. And then we started learning. And our acquiring business actually happened just because of a conversation, because some, a good fintech who's a major acquirer was not getting the services from their existing bank in the manner they wanted. The things were scaling up. So we said, please help us re-engineer our API so we can help you. And that started acquiring business. So I'd say that, there is nothing which you can pre-script. It is about first getting your mind right, that you don't know everything. There's lots happening outside, and then experimentation. And the way we were able to propagate this across, actually, in retrospect, we were a little too liberal. We let every business unit figure things out. Because what happens is if you put, and this is my personal view, if you put a centralized, kind of chief of staff or CDO too early, then this entire thinking digital, okay, and it's not technology, thinking digital becomes the preserve of few people who get fancy presentations done to them, and then they will issue edicts out, you know, aaj se ye karna hai, kal se wo karna hai. So we let things, even within the bank, bloom, and we had a lot of, it's a very messy affair to do it. It's only now that we are consolidating because the scale has become large. We want to build fair practices, you know, general processes. So I think each organization is different. So I cannot sit here and say this is a recipe for everybody. But I'd say that it slowed us down in the initial years. But at least I know that 50–60% of my colleagues immediately start thinking, you know, in a different way. Because you need to take a different approach to making things relevant for you. And the principles are similar. I mean, respect your partner, be upfront with them, even if you can't work with them, and then try to make it happen for them, and then do constant reviews so that you educate yourself and your partner knows that what are your constraints being a regulated entity, which will impact their speed and the kind of resources they deploy. So I think, and I always believe that there is no, you know, kind of final hurdle to cross. If you build that resilience and the learning ability in the organization, I think that's the only way you will continue being, I would say, having a chance to succeed. And then you'll figure out, boss, jo aaj kiya tha, wo kal kaam nahi karega. And therefore, the same DNA will have to operate again.
Maybe a last link question, and this is the only panel where I'm not asking this from a public because we will run short of time, but in the other sessions we'll try it. But maybe I'll ask, normally digital महंगा होगा. Is it too expensive to go digital, right? Is it too expensive to go digital?
I think, let me put it this way, if you take something which has been crafted off the shelf, which comes with, you know, digital and a lot of, you know, speak around it, I don't know. I think we've not spent a lot of money on digital. I don't even know if we have a line segment called digital spending. We've used our existing core bank, existing middleware, and then we keep upgrading because scale बढ़ गया है. Earlier TPSs were small. Today Anurag wants a TPS of, you know, 1,000, 10,000. Then, you know, it's also happening to us. Risk management. So I think the fact that we call it digital, you know, it's a nice way to introduce a new topic. Otherwise, nobody will, you know, think. You get better valuations, you get better newspaper headlines, and sometimes you get better regulations also. But I think digital and non-digital is not an option anymore. I mean, so I think the fact that you call it digital, you know, and fin and tech is a creation of that period. I mean, today, I mean, I was a banker during .com. I mean, so I've seen when having a website was a business model. I mean, today, having a website is not a business model. I mean, you know, so you know, what changes when, you never know. So just be humble and be open and, you know, struggle through. That's the only way of doing things.
Thank you. Thank you. I know we're running short of time, so I stop now. But thank you for all your insights. Maybe, I don't know how to do it because kind of speakers we have, it's always sort of privilege and we just think that we are not justifying their time. But thank you. This is superb. Thank you, guys. Thank you.
Thanks, Amir.
Thank you.